Cryptocurrency is transforming the financial landscape, offering a decentralized and innovative way to grow wealth. But for many, the world of crypto feels complex and intimidating. This guide simplifies the process, providing actionable steps and motivational insights to help you start investing in cryptocurrency today. Why invest in cryptocurrency? Cryptocurrency offers unique opportunities compared to traditional investments. High growth potential. Assets like Bitcoin and Ethereum have seen significant value increases over the years. Diversification. Adding crypto to your portfolio can reduce overall risk by spreading investments across asset classes. Accessibility. Crypto markets are open 24/7, and investing requires only a smartphone and internet connection. Step 1. Understand the basics before diving in. Grasp the foundational concepts of cryptocurrency. Blockchain technology. A decentralized ledger that records all transactions securely and transparently. Cryptocurrencies. Digital assets like Bitcoin, BTC, Ethereum, ETH, and others used as currency or investment. Wallets. Tools for storing crypto, either online, hot wallets, or offline, cold wallets. Step 2. Choose the right platform to invest. You'll need an account on a crypto exchange. Popular platforms include Coinbase, beginner-friendly with a straightforward interface. Binance offers a wide variety of cryptocurrencies and low fees. Kraken, known for its robust security features. Tip: compare fees, features, and supported currencies before choosing a platform. Step 3. Start small and invest wisely. Cryptocurrencies are highly volatile. Start with small, manageable investments. Dollar cost averaging, DCA, invest a fixed amount regularly, regardless of market conditions. Portfolio allocation. Limit crypto to 5 to 10% of your total investment portfolio, especially if you're a beginner. If you had invested $100 in Bitcoin in 2013, it would be worth thousands today, even after market fluctuations. Step 4. Secure your investment. Security is crucial when dealing with digital assets. Use a secure wallet. Hardware wallets like Ledger or Trezor offer superior protection. Enable two-factor authentication, 2FA, adds an extra layer of security to your accounts. Avoid sharing private keys. Your private keys are the gateway to your crypto. Keep them confidential. Pro tip: follow best practices to avoid hacks and scams, such as phishing attacks. Step 5. Stay informed. Crypto markets evolve rapidly. Keep learning to make informed decisions. Follow trusted news sources like CoinDesk and CryptoSlate. Monitor market trends using tools like CoinMarketCap or TradingView. Join online communities like Reddit's r/cryptocurrency for real-time discussions. Step 6. Diversify your crypto portfolio. Instead of putting all your funds into one cryptocurrency, diversify to manage risk. Large caps. Bitcoin, BTC, Ethereum, ETH. Altcoins. Solana, Sol, Cardano, ADA. Stablecoins. USDC, USDT for less volatile options. Diversification in crypto works just like traditional investing. It balances growth with risk. Step 7. Plan for the long-term. Crypto isn't a get-rich-quick scheme. Treat it as a long-term investment. Set clear goals, e.g., holding Bitcoin for 5 years. Avoid panic selling during market dips. Revisit your strategy periodically as the market matures. Take time to learn and let your investments grow over time. Cryptocurrency is more than a trend. It's a revolutionary shift in how we view and use money. Starting your crypto journey today, with thoughtful planning and disciplined investing, can lead to significant financial rewards in the future. Remember, every expert investor was once a beginner. Take the first step confidently. Your future self will thank you.